Hello, welcome back to Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week I'm going to explain a little bit about time analysis, maybe take you away from some of the bias or confirmation that you might have had about time, intrigue your mind a little bit about how to look at things. And then we're going to take a look at two major stocks within a Dow Jones Industrial Average and why I think these are topping out and need to be careful over the next couple of weeks. All right. Last week, I received a question about time and whether or not I use financial astrology to base some of my timing calls within the market. And this, I'm going to answer that in a couple of ways, but the simple answer is no. So, if you think about astrology, it's, okay, the moon's doing this versus the sun versus this planet, and therefore that's how people feel based upon when they were born. I know, this sounds a little crazy. And where people get, kind of makes my skin, itch a little bit is like, okay, well, Greg's talking about what's going to happen based on time, based on certain factors like that. And it's simply not the case. The way in which you understand time is to say, okay, if something happened in the past, can we measure it statistically? Can we use science, math? Can we look at things and say, we take two pieces of criteria or three or four, and when those happened in the past, do they happen in the future? All right. Within that question that I received, it was, do I use the moon cycle for time analysis? Okay. Now, I'm just gonna show you what that cycle is. You can determine for yourself, but I'm also going to give you a little bit of another way of thinking about things. Okay. And again, you're not gonna see this on CNBC. You can call people kooks for looking at this stuff. I understand that. Look at it a different way. Remove any biases that you might have initially, and I get it. Some of this does sound crazy, okay? But think of it in terms of statistics, in terms of math, all right? So these little dots on here, full moon and new moon, all right? Now, this is back in COVID, okay? I'm going to zoom in here. But this is, look, March 24th, that was the bottom. March 23rd was the bottom, and then we had this huge rally, right? Okay. Now, we can go along here. Now, this is actually a lunar eclipse, full moon on June 5th, marked the high, okay? Now, you can go through and say, not every single moon phase marks the high or the low, but it does a decent job of, marking at least very, very short-term highs and lows. Okay, this is back during around the election. This is September 2nd. That marked the high. Right before the election in 2020, October 31st, that marked a very significant low, okay? And then we can go through and just see where these, no, this is back in 2022 right here. This is January 2nd. That marked a pretty significant high. And then these phases continue to mark decent highs and lows throughout time, okay? Now let's fast forward to right now, all right? You can see February 9th. This was last week. Is that going to mark, a short-term high like this? Yeah, it could be. I mean, again, I'm looking for stocks to start topping out here, not major crashes, just starting to top out, something that I'm going to be trading over the next few weeks. And so we can also do this, moving forward. It's easy to pinpoint, where time analysis comes into play. Now, again, as I said in the beginning, the important factor here, and you can do this research on your own. Go back, you can see when the new moon is, when a full moon is, and then do the statistics yourself. How many times did it mark a high or a low? Now, a lot of people like to confuse time analysis, GAN analysis with it has to be a major high, it has to be a major low, it has to be a crash, it has to be a boom. That's not necessarily the case. Try to understand how a market trades into a time factor, which you can do with these full moon or new moon, whatever it might be, and then just see and remove the bias of, well, it's the moon and therefore, okay, yeah, it has gravitational pull on the Earth and, it affects the high tides and low tides. I know. Okay, should that affect the stock market? What you think matters doesn't matter. Do the statistical analysis yourself. Do the research and say, okay, if I have these two sets of criteria, either a full moon or a new moon, how does that go back in time? And S&P started trading in 1950. Go all the way back to 1950. It's going to take a lot of work. And then try to understand what that's going to be. Okay, that is a very, very basic premise of time analysis. Now, I shared a chart with paying subscribers today based on a much more dynamic, advanced time analysis what I'm thinking about in terms of a 2-year cycle, and not necessarily, just these short-term tops and bottoms that may be caused or may happen around these, moon events, if you will. Again, I understand that sounds crazy, okay? The key is to understand any certain set of criteria. If you want to use, a lot of people think that on stocks tend to bottom on Monday and Tuesday, they top out on Thursday and Friday. Okay, there's your set of criteria. Try to understand what that statistical measurement is going to be, and then you can create a model off of it. Now, I am also going to be coming out with a new time index that is going to take things much more in depth than this, in terms of very, very short-term stuff. But it's going to, based upon what those statistical measurements are, and I'm not going to share what that data set is, but it's exactly what I told you. I took a set of criteria, a lot of, it wasn't 2, it was many, more like 20. And then I did statistical analysis of it to try to determine what future points can happen in the future to trade on. So again, I know that sounds a little crazy. It can be a little confusing. And some people will refuse to ever believe of, why this can't cause that. You can't look at it like that. You have to look at it in terms of math, of statistics, to remove that bias. And if it's going to help you trade, don't you want to do it? I think you do. So that's just a little teaser on some time analysis. Now let's get into the stock market. Okay. Now, here are 2 major stocks that I want to cover. This one is Microsoft. Now, this is a weekly time frame. Okay, a weekly time frame. So I always tell subscribers, never use anything in isolation. So, going back, if you want to study the highs and lows of the moon, and use that as a time model, that cannot be your only factor. It just cannot. Okay. Same thing with understanding price and indicators. Okay. I'm never going to look at just a daily. I want to look at weekly. I want to look at different indicators. I want to look at Elliott wave principle. And that's what I have here. So from this low, you can see 1, 2, 3, 4, and then this looks as a topping out 5th wave here. And I've even subdivided these counts for you. Now, as you can see, as I zoom in here, what do I have here? I have this week as being important, or this week, next week, and then maybe into March. Okay. This isn't trying to top tick every single wave of every single stock. As I mentioned last week, top tick is a process. It takes time. However, a leading stock like Microsoft is something to be aware of. And to me, this is telling me that we have, a significant top in place that I would like to trade. So let's also look at a few other things. Here is, and I'm just going to highlight this for you. Okay, this is the RSI. Very, very overbought. Okay, we can go all the way back. The last time it was at this level, you can see, this was back in 2022 or late 2021, early 2022 when it started topping out. Okay, now let's look at another one of my favorites. Okay, and this is the composite index. See how this is sloping down? This is causing negative divergence, both with the RSI overbought and with these new price highs. Okay, so that is something to be very, very cautious about. Now let's look at a completely different stock in Caterpillar, but one that is still important. Okay, so here we have, again, not the same pattern, but it fits within the rules of Elliott wave 1, 2, 3, 4, 5, and then we have this a big correction. These were both around 20%. Okay, this was about 20%. This was about 23%. Okay, and then we have this 1, 2, 3, 4, 5. Now it's possible that CAT bounces around over the next couple of days. That's fine. But once again, look what we have here, but on the indicators. All right, so we have an overbought situation on the RSI, and then just like Microsoft, we have negative divergence on the CI, on the composite index. Now, also again, I want you to understand that these are on a weekly time frame. These are much longer time frames. But when you see it on the weekly, when you see it on the daily, like I outlined last week, this gives, I'm not telling you that you need to go out, sell all your positions and start going short. That's not my goal here. My goal is to tell you, I'm not giving specific trading or investment recommendations in Diamond's Edge, but this is where I would not be as aggressive, right, buying these two stocks. And so that is the general message that I'm looking at. If you combine what I outlined last week with what I'm outlining this week, I'm expecting a lot of volatility. Okay, again, so take a look at time. It's probably a new path for many of you, but I can promise you it'll lead you down a path of, you know what, I'm going to start looking at things rather than, it may not make sense from a reason or logic, but really if you just think about the criteria of doing something based on statistics, that helps you kind of weed out the noise and improve your trading probabilities when you can get these volatile time periods right. And then when you look at price like we did today with two major stocks, it's sending a big warning and something that I'm going to be trading in 10 Stock Trader. Thank you very much. See you next week.